Alexa, pause. Hello, hello. Good afternoon, trader. Happy Friday, everybody. Welcome out. We had an interesting final trading foundations. I was going to do a 100 trade log post completion review. But I thought I had that, and then turns out I didn't. So we actually called an audible, and we went a different direction, and we actually looked at the automation of orders based on a setup that would trigger automated first trigger OCO orders with trying to implement some automation in the execution of your orders. It was actually quite good because for me, it made me realize if I'm gonna try to talk about that from the alerts. So the alerts are up to you. You can trade them how you normally trade. There's just gonna flag when we see opportunities that look like they're going to be triggered and showing signs of momentum. But I am going to put together a automated trading video for stocks and an automated trading video for options, because we did get in the weeds a little when we were going through that. So you'll need to see, like, what would that look like? How would I create that? Those will be resources that will accompany the alerts, so that if you decide, yeah, I want to just kind of, if I get those, build an automated process that I can manage without having to handhold. That's the intention. So we will look at that. Okay. Welcome to the Market Watch Group Weekly Market Wrap. My name is Scott. I will be your host. As always, here's the disclaimers. Education, illustrative purposes only. We are not brokers. We are not investment advisors. We do not provide guidance or recommendations. Any investment decisions you make are, of course, your own. What are we doing today? We're going to look at how the market's wrapping up. Today's analysis, we're going to look at our market posture to see, did we have our finger on the pulse? Yeah, did we have a good read? Did we increase when we should have, or not increase if we shouldn't have, or did we miss something? So we're going to just take a look at a market posture to see, what does this week show us? We're going to look at what mindset we might have for any trades carrying over the weekend. And I would expect that there's a chance you are carrying some trades. There's probably some profit taking as well. I've seen a good number of bullish trades that had some signs of maybe some resistance after a nice move. What are we looking for next week? This week we got some inflationary data. We'll talk about that here in a second, but came back generally favorable. And this is where we had a couple of inflationary reports that did not meet expectations. This one did, and this is the most favored, according to consensus regarding the Fed's perspective, the most favored measure and indication of inflation. And it's showing we're still in a downward progression. Okay. We'll look at our watch list. Talk about what we see in there. What's finishing, what's starting or setting up that we might be looking for next week. And lastly, we'll wrap up this week's. We're already done with section 1, just like that. What first week, you still have a little less than 2 days to get your hour in before Sunday, because when Sunday hits, boom, we're switching gears. We're no longer working on the personal info section. We're now working on section 2, market posture, market forecasting. All right, let's dive in. Okay, let's start here. This is our posture. We went up. We maintained bullish. Let's just go take a quick peek and see how it feels. Looks nice and bullish today. Buyers coming in. We seem to be bouncing off of this, making this a higher low. Now, remember, just like when we made a higher high over here, we didn't score that higher. We're not like, oh, it's another higher high, another 1/4 of a point. Because then this would be a higher low, and then this is another higher. No, we're in a 2. This trend, these 2 lines, which you can see, we bounced, we're heading higher. Looks bullish. Is indicative of a continuation on that score. We pulled back, we bounced, we're moving higher. A 2 is still a 2. Yeah. Remember that last week we scored this higher for the first time when it broke out. We moved it to a 1.5. Does this warrant now moving to 1.75? Of course not. This is the same breakout, but it's a continuation of that breakout. It is a validation of that increase in score. Yes, do you agree? You can kind of see how we've shifted. For a while, we were in this trend, and then we saw it break. And even here, as we moved to these red trend lines, we even broke those. So from an institutional standpoint, we have to acknowledge that this looks bullish. This looks good. Not an increase. We've already done that, right? Look at our score. We're at a 3.5 out of 5, and I'm reluctant to ever put things at the highest. So yeah, that's a very strong score right there, without a doubt. Volume. Okay. So volume, the expectation was going to be that we were losing some of our old scores, right? We are going to lose some of our old scores. I believe, actually, it looks like I might have been wrong. It looks like we have a couple here, positive. Then we have a negative. And, so positive, positive. No score here. Was this scored? No. I don't believe it was. It was kind of flat anyways. That was definitely negative. So this is 2-1. This is, 2-1, but the 2 are stale. They're barely hanging on by a thread. So if that's all we saw, I was definitely going to, at best, leave my score at a 1/4 of a point, knowing that next week it would be a 0, or even move it to a 0. However, a little ray of hope. We did have above average volume yesterday. Yesterday was an up day. It was a doji, but it was a positive day. We went from 506.25 to 508.25. Yeah, it was only about 0.5%, a little less. Still positive. So now all of a sudden we have 2 stale days, 1 buy, 1 sell. I think where I may have dropped the score to a 0, it now is going to stay at a 0.25. I don't think it's enough to raise it back to a half of a point, though. I'd love to hear your thoughts on that, because we dropped down. I just, with those other 2 days being just about to fall off, I would say this maintains us at a quarter of a point. We still have more buyers than not. I don't think it's enough to raise it. Let me know if you see it differently. As far as our major market goes, we know that the deciding factor tends to be the IWM, the small caps. So let's go take a look at the small caps. They look fine. They held they held the 50 here, again here, never even got back. New high. I mean, it looks like a cup and handle. Technically a new high, but really it's maybe hitting some resistance, but it looks like a cup and handle. I think that the small caps are still in play. Despite adjusting to a less accommodative Fed, small caps are still in play. So I think that we'll maintain the 0.75. I still don't think it's enough to crack it up to a 1. Some people are already there. I think Sandy's already there, but definitely enough to keep it there. Sector rotation. That's IWM calls pop to love it. Love it, press. Sector rotation. It's going to stay a 1. Financials are still great. Industrials are still great. Communication services is holding up, even though Google's struggling. Technology's holding up, even though Apple is struggling. Healthcare is still strong. Consumer discretionary is still strong. I don't see any indication that that would not hold up. Now, the VIX. Now, remember on the VIX, we jumped a half a point. Was that a viable move that we made in upscoring that by a half of a point? Let's go take a look. And I'm going to say yes. You can see we've dropped now over the last week. We were here. We were sitting down at this level right at it. We moved it. And you can see we broke down even to another lower point still. We're at this lower low here. Am I going to score that higher? No. I'm at a 1.5. I mean, I'm at a 1.25. What would make me get to a 1.5? The next lower high. Let me get my drawing tools. So right now we went from a 0.75 to a 1.25. I had this high, then I was followed by this high, and now we've pulled back. This is all one pullback. It might have started up and then pulled back here. It's all one pullback. But my next thought is if we do see this thing move up a little bit and then roll over, that's the next quarter of a point there. And if we take out, these lows here, bam, that's the next quarter of a point. I'm at a 1.75. That's as good as it gets. I'm not going to move it to a 2, I don't think. It would take a lot to convince me that this is as good as the VIX is ever going to be. So these are the things that would have me continuing to increase. But as of right now, 1.25, I think looks accurate. So what am I expecting when we do a formal scoring process on Sunday? Unchanged. I think we did a good job dialing it in. And it looks good at a 6.75. You can see we've been at a 6.75 since late January. So, back in this area here is where we were a 6, and you can see we've had multiple bounces, multiple opportunities since then. Hey, Michael, good to see you. Glad you could join. All right. Is the volume going to get above average today? If it did, I would go to a half a point. If it did, I don't think it will. We've got a half an hour left. Average is 67 million. We're at 50 million. It would have to get 17 million more, which is literally 3 times the volume we've had, or 33% of the volume we've had up until this point. I think we'll get close to average, but not above average. So that's how I see it going forward. Let's talk about what's been happening. So you can see we opened flat and then rallied. S&P up 0.8, the Dow not as much, only 0.25, NASDAQ 1.1, Russell almost 1%, although crude oil jumped over 2%. We don't love that. We do not love oil moving right now because we've been seeing oil and a bit of basic materials moving. So yeah, I think that the pressure that could have on prices, on inflation is negative. We'd rather not see that, but nothing too bad yet, but something we're definitely keeping our eye on. What else? Apollo's Slock, the Fed will not cut rates this year. He's in that camp by himself. That's for sure. What else? We averted shutdown, but there's a new deadline coming. There's always a new deadline coming. Always 12. Okay, let's see what else. I think that's about it. If we look at the economic calendar, you can see that everything's come in for the most part as expected. There was an unexpected drop in consumer sentiment, but it didn't really impact the market at all. The market paid most attention here. PCE year over year. We're below 2.5%. I mean, let's be honest. If you look at the average of inflation over the last 20, 25, 30 years, depending on which one you pick, it's going to be somewhere between 2.3 and 2.5. It's never at 2%. The Fed says that's their target, but it's not really ever there. It averages somewhere between 2.2 and 2.5. We're at 2.4 on this reading. Certainly we want more confirmation, but yeah, that's the news we were looking for right there. And the market's responding to that. Next week, what do we have? Nothing Monday. Hardly anything Tuesday. And then it's employment. ADP on Wednesday and job openings on Wednesday, which has been stable. And Jerome Gerber is speaking to Congress, I believe. It says Congress both times, but it's usually Congress first and the Senate second. Jobless claims on Thursday. Then on Friday, what do we have? Consumer sentiment, hourly wages, and of course, Department of Labor, non-farm payrolls. Remember last time we had an unexpectedly huge jump, 350. Honestly, I think that if the market only got like 150,000, would be pretty happy with that, because it's like, it's sustaining the current labor economy or the labor market, but it's also allowing the Fed to be like, okay, yeah, we could definitely reverse policy and see rates decline. Okay, real quick peek now that we got this week's data. Still no expectation, although it's shifted a little bit. It's worse than 20-1 odds. We've been 4-1, and now you can see it's more like 3-1. We were at 4, now we're at 3-1. Still largely against, but maybe there's a little backdoor opening for a surprise. The consensus is June, and it's about 1.5. It's improved a little bit. June is the first time we're going to look to see those cuts. All right, so that's what we have going on. Posture looks strong, looking to stay strong. What does that mean for trades? Well, as you see today, even without volume, knowing volume's not necessary, we're bouncing, we're moving, right? We're moving. So if you're carrying trades, yeah, but look at this. The S&P is moving. What is the SP or the Apple doing? We said technology's looking good despite the fact that Apple is not really participating as a bellwether. That's fantastic. It is in a situation where I believe that we have this line of consolidation. You know, I'm waiting for it to break. So for me, Apple needs to break out, pull back, and somewhere in this range of a higher low. That's where I'm going to trade Apple. Anything other than that, I'm just watching it. But I am a spectator. I'm a fan. I'm rooting for Apple. I'm certainly cheering that it does this. I would love to have that be the next trade. Let me erase this. AIG. This is the end of the trade, right? Put it on back in here, ran it up. Stochastics is rolling over. Second day in a row, we're hitting resistance. The question might have been, do I take some profit and carry some or take all? This trade looks finished. AMD, if you could have caught it, this one looks still viable. This is where having the prospects of automation, same with AIG, these trades work best. If you look at it on this day as being set up, you're basically saying when this setup is confirmed, which we would probably acknowledge is somewhere through here, bam, you enter the trade, your stop is here, you've got a great reward to risk, and then it moves. There's the risk, though. If you did the same thing here, you might have said, you know what, I'm in if it gets between here and here. Well, if you set your range and it opened above your range, it wouldn't have got you in. If it got you in on the open, on the open is tough. We know that we're not going to get great fills. So that's a tough one there. I typically would want to get in after the first 20, but if you go look at what happened, nope, let's get you. By the time the first 20 minutes came out, this thing was already at 185. So, you know, could we have looked to have taken that entry? But I'll tell you what, by 185, let's get back down. That's here. After the first 20 minutes, it's already halfway up. That's a much harder trade. So you have to decide, would I be willing to take the entry if it's on the open or in the first opening range on an automated? If not, there you go. Amazon, same kind of a thing. Triggered, still going, still looks viable going through the weekend. AXP, I would say this one would be more of a like sell some, keep some type situation. Still looks like there could be some momentum. Stochastic is pinching, right? We are a little higher. Sell some, keep some. That's the thought process. Boeing, yeah, that's why we don't trust these things until it's broken out. It just looks like it's going to keep falling here. BLDR, we needed to wait for earnings. You could see it kind of gave. That's a tough one. I didn't do it. I thought about it. It was a tough entry. It's moving well now. Industrials are just so good. BX, I think, is open. It's viable. City is one that we looked at. I would say that the parameters I set are still viable. The entry was at 56.05. We only got to 55.95. I would definitely say the exact parameters are still viable for Monday. Note on automation took a put on AMD. Oh yeah. Before I could sell in the AM, I was upside down 45%. Yeah. Yeah. If you get on the wrong side of it in a heavy momentum situation, it can be tough. City, I think, looks great. I still see City as being viable. Caterpillar. strong, still going. Stochastics is pinching. We're above the high. I think you could take some, carry some. Capital One, nothing there yet. COP, Waiting for Costco now. Probably going to have to wait through earnings at this point, which are coming next week. CrowdStrike, waiting. Earnings are coming up. Going to have to wait for earnings. CSX was the other one that we talked about. We didn't build the automation. If we had, this would be triggered. Yeah? This would have triggered right here when it crossed 38.08, 38.10. So this is viable. I think it's viable now. Stop loss is here, 37.60. 60 cents of risk. $1.80. $1.80 puts you at 40. So you're in here, stop loss just underneath here, and you'll be able to start moving your stop as of Monday, I would imagine. I think this looks great. You didn't miss it. I mean, it's literally triggering as we speak. Maybe we'll look at a trade on this one. Volatility is very low. Yeah, maybe we will. I might not have time. CSX, open for business. Mind you, 3-1, maybe even a 4-1. DAL, waiting for the pullback. DHI, okay. I said I've been unconvinced. Now I'm convinced. Broke out. Now what? Wait for the pullback. Next time it pulls back to test that 50. DIA. Steven said I like CSX. I did too, but I let it get voted and I didn't have a vote. So DIA looks okay. Ford, it kind of stalling a little bit here. If you're in, you might think about what you're going to do with. I think it's still viable. That's right. It did have a little open interest. It was enough, but it wasn't great. That's what we said. Is that right? Few hundred, enough, but not great. Fastenal starting to consolidate. Looking for this one next week. GBTC looks like it's in a consolidation after a big rally in Bitcoin. GE, look at GE, the monster. You just don't expect to describe GE as a monster. NVIDIA, yes. SMCI, yes. GE, not usually, but yeah. Gold. Oh, look at gold all of a sudden rallying today, a couple percent. Wasn't doing much, and then it started to move. Look at that. Google is a little under the weather. It's under the 50. It's not doing much. My nemesis, yeah. GE and healthcare stocks, man. I don't know what it is. Where was I? Home Depot looking strong today. Maybe. There it is. Still going strong. I got to tell you, I severely underestimated the strength of Home Depot. So IBM's trying to make a little bit of a move here. Things are trying to pop. Could we look at APP, please? Yeah, let me go back. Here's Intel, nothing there yet. APP. AppLovin. AppLovin? AppLovin? Well, that's a fun name. What do they do? AppLovin? Or is it AppLovin? I don't know. It looks bullish. It's a little bit of a choppy stock. You can see it goes up, down, up, down, up. But it's got some momentum for sure. Tough one for entry if you look at that, because your stochastics been nothing but overbought, which we said that's to be expected in a bull market. You're gonna have overbought conditions. That's just What's going to happen? Um, like I said, you're up, you're down, you're up, you're down. Whoops, not that far down, but that's kind of choppy, but it's moving up overall. So if you ever wanted to smooth things out, of course, a nice smoothing indicator would be something like this, where you can see a little bit more how it seems to be popping out. So if you thought you were jumping in, this might give you a nice little reference point underneath this, and then something that you could try to carry forward, like here, here would work out. It's a good methodology on this stock, not here. This one came with some long shadows, but mostly it's a good strategy. Okay, let's keep looking. Where was I? I believe I was at IWM bullish. Let me get out of the Heiken Ashi candles. JP Morgan, maybe consolidating. Meta. Look how strong Meta is. We said it could be right here coming out of this. It's just keeps on moving. Microsoft. Microsoft is also trying to continue its move forward. Netflix. Netflix right back here is where it really gave its first signal, was anywhere on these 3 days. If you got in on the first day, you'd be a little bit waiting, then it pops and it pauses, then it's popping. You got to be patient with it. What helps us to be patient with signals? I would say Heiken Ashi. You can see it worked the entire time, right? Those lows, no matter what, once it turned into those lows, they advanced the entire time. Okay. Let's get back out of this. NVIDIA back in business. I told you, flags. Maybe you thought that was it, but if not, it definitely broke the flag there, and this thing could be off to the races again. Netflix is a work of art. NVIDIA as well. It's a monster, without a doubt. A car moving again. What do we say? Flags. Turning on the stochastics, but everyone's like, but the stochastics was overbought. Again, that should be your absolute last consideration. Look what this thing has done in overbought context. The last time it made a move like this was here. Guess what? Overbought the entire time, but one little dip. Yeah, get comfortable with overbought conditions if you are using oscillators when you're in a bull market, without a doubt, right? Don't let that ever be something where you're like, oh, well, the stochastics is overbought. So what? It's overbought because there's more buyers. I feel like my line needs to be a little thicker. There we go. Okay. All right. QQQ, bullish, moving 1.5%. Ross Stores. That was one I took that we found on our list, and it engulfed, got out yesterday, still out today. SMCI, just so choppy. I don't know. Are you interested in something like that? That's a tough one. That is a definite tough one. SPY, there it is. Still looks bullish. Volume's not going to get there. TPR, very close. That's on the list. Consumer discretionary, it's been consolidating. Looking for the next opportunity. TSM, Taiwan Semi. Kind of moved already, but I put it back on the list. I hadn't been watching this one. Looks good though. Taiwan semi. I like AMD, NVIDIA, and Taiwan. UNP looks close, like CSX. It's in a setup. Any viable trade that gets triggered on confirmation would be a valid thought process, if you ask me. Here's today's VIX, even still lower today. There's not a automatic hedge signal developing here, if you were wondering. But if you are carrying bullish trades and you have a bit of concern, what is the thought process on preemptive hedges? Well, when the VIX is at a 13, I would say, yeah, it's never a bad idea to consider cheap options for hedging. That's just a standard rule of thumb. Okay. Okay. What else? What else? Waste management, setting up, flagging. A lot of strength here. Really accelerated out of this trend here. You can see we were on this trajectory, accelerated out of it. So now what do we think? Well, maybe we're moving into this trend, which is a steeper representation. Yeah, we would love to see that. That looks fantastic, right? That looks fantastic. Okay. I think we'll have setups. I think we'll have alerts. Walmart, look at Walmart. It's pulling back, little hammer forming already. This thing it may get back here to 57 on top of this old like cup and handle type formation. It may only get back to here. It already got close. Walmart on the list. Biotech is moving. It's got some momentum, but it's a bit choppy as always. Materials. I don't love materials being strong like this, but they are strong like this. Communication services look strong, trying to break out even more as Google struggles. That's what I mean when I say I feel like we've had breadth this whole time. A lot of people are like, oh, we only have the 7. No, Google's not working. Tesla's not working. Apple's not working. And here we are, still looking fine. Facebook, Meta, certainly working. Energy, a little bit breaking still. We don't love that. Financials look strong. Maybe moving into consolidation. Industrials still looking strong. The biggies, I know, huh? XLK breaking out. It's up almost 2%. Technology looks fine. Staples, stable as it has been. There's no acceleration in this trend. This trend looks stable, right? Stable. What's the position of Staples? Lower level. It's not in the upper echelon. It's where it should be, and it's staying that way. There's no desire to increase exposure in a defensive area like Staples or like utilities. There's just no interest. There's no trend. There's no momentum. It's just kind of meandering along. Here's healthcare. Healthcare looks strong, like it's trying to be tradable here. That's viable. Be looking at that. And discretionary, we had seen it as reemergent back here, and it's done well. A few discretionary trades have popped out of that, so that looks good. Still seeing more of that. Again, that reconfirms that we have all of our growth sectors absolutely still in place. Okay, last thing before we wrap up for the week. Here we are for the trading plan outline. We are focusing on personal info. Be thorough, be thoughtful, be reflective. What are you really good at with your trading? Now that especially the more you trade, where you're like, man, I did pretty well with that. I'm feeling good about that. What are you still struggling with? Where do you really find yourself having to self-talk through to really force to, adhere to the plan? Make sure you're dictating some thoughts on commitment and discipline, taking some time to write a mission statement like it's your business, write your vision statement to really flesh out your momentum. A lot of goals can come from what you find about yourself in here. A lot of people have a tendency to underestimate or skip this section. Bad idea. Make sure you do it. 1 hour, just 1 hour. Then we're moving on to market forecasting. We will be normal time on Sunday morning at 11 a.m. I am going to absolutely try that, Stephen. He said, am I going to check out the posture updated Excel where all I do is one keystroke and use it this Sunday? Yes. I'm committing to that. Yes. No, thank you. Okay, that's it. We're in a good place. Market's in a good place. I would expect you've got bullish trades. You're carrying some bullish trades. You've got some bullish trades setting up. If not, let me know. What are you seeing? What are you wanting to do? Enjoy the rest of your weekend or your day. Enjoy your weekend. See you Sunday. As always, happy trading.